Welcome back. Now, at the core of the US-India tariff tensions is a long-standing demand from Washington. US wants greater access to India's agricultural and dairy markets. And this push has come up in every trade negotiation. And in a way, it was a deal breaker for why we haven't struck a deal so far with the United States. But India's position has been firm, even now as we are slapped with a 50% tariff. In fact, speaking at an event earlier today, Prime Minister Modi said that he remains focused to protect the Indian farmers' interest. Listen in to Prime Minister Modi's first reaction to Trump's tariffs.
हमारे लिए अपने किसानों का हित सर्वोच्च प्राथमिकता है। भारत अपने किसानों के, पशुपालकों के और मछुआरे भाई बहनों के हितों के साथ कभी भी समझौता नहीं करेगा। और मैं जानता हूं व्यक्तिगत रूप से मुझे बहुत बड़ी कीमत चुकानी पड़ेगी, लेकिन मैं इसके लिए तैयार हूं। मेरे देश के किसानों के लिए, मेरे देश के मछुआरों के लिए, मेरे देश के पशुपालकों के लिए आज भारत तैयार है।
Very firm response coming in from Prime Minister. He stands behind India's agricultural and the dairy market. But let's get in a market opinion now. Markets are slipping. We're down close to about 150 points on the Nifty. Prashant Khemka, founder of WhiteOak Capital Management, is with us on the show now. Prashant, hi. Thank you for joining in. You know, we just spoke last week on Editors Roundtable, and at that point, it was unfathomable, right? A 50% tariff. A friend would become a foe. But now, as we're dealing with this reality as it is right now, it may change tomorrow. How are you dealing with it? What are your initial thoughts on how this is going to play out?
Certainly, Rima. Good to see you. He is, as we discussed at the roundtable as well, Trump is, by design, by his choice, unpredictable. So let's first of all agree that it is not possible to predict where it would all settle. I think India is reacting in a very responsible manner with the patience that India has shown in not rushing into any kind of a trade deal. Because even if you strike a trade deal, there is no saying that Trump will stick to it. He can always come back and, like if we had struck a deal a month ago, he could have always come back and because of Russia importing the Russia oil import, he'll impose additional tariffs on what is already agreed upon. And there's no, you can't, argue with someone who, openly can defy logic at his whims and fancy. So I think the only thing we can do is wait. In my assessment, having said what I just said, it is his negotiating tactic. If you look at his past pattern, he generally jacks up his rhetoric and his tweeting with some such measures as they imposed on India, with other nations as well when they're close to reaching or they are in final stages of negotiation. Here he is trying to hit two targets with the same arrow. One is the Russia negotiations that they're having in the midst of related to Ukraine war, as well as the India trade deal. So I think it's very convenient and it is predictable. At least I think it's become somewhat predictable of Trump that close to final stages of negotiation, he ratchets up his rhetoric and such measures. And hopefully, as and when some kind of a deal is finally settled, my assessment is that final tariffs will be well below the 50% and hopefully would be well below the 25% initial tariff measure as well.
So if once and when we see the final deal as well, Prashant, considering that it is below 25% also, do you think there could still be some sectors which could be at risk? We spoke to a lot of textile companies today. The gems and jewelry sector spoke about how it could be a big hit if it does come about. Do you think below 25% as well, these sectors are at risk?
Those are the sectors most at risk, Sonal, that you pointed out, particularly, let's say, textiles. We are competing with nations like Vietnam, Bangladesh, and to somewhat lesser extent other South Asian countries and even Turkey, they are all in the teens, mid-teens to high teens or 20%. Yeah. So for us to be presently, as you're showing, 50% certainly renders us uncompetitive in a business that is very cutthroat and margins are slim and returns on capital are slim. But even if it is at 25, even a 5 to 7% or 10% incremental tariff would impact that sector because of the competitive levels in that sector. So either the government would have to step in with some additional support measures for that sector, or the final tariffs would have to be lower than the 25% announced for the textile garmenting sector to not feel the brunt of the competitive hit.
So, in that light, Prashant, does the portfolio tilt acquire a more domestic oriented theme now that because of this uncertainty with the textile names, the shrimp feed names, a lot of these exporters being under the radar, does the portfolio tilt acquire a more domestic oriented face, say for the likes of the consumption names and so on and so forth?
Sure, Hormuz. I think it is possible that for incremental money, you can do that. If you're putting, whether it's fund managers like ourselves or even individual, I don't think there's benefit to be gained by, making U-turns in the portfolio or right turn, left turn, or whatever turn spaces in the existing portfolio, such macro, news. I haven't seen anyone make. Maybe I'm wrong, but I haven't found myself a way. Our team hasn't found a way, nor have we seen anyone make consistently any money other than the brokers when you churn your portfolio so much. But yes, on incremental money, if you want to wait out the uncertainty, then it may make sense to be more domestic oriented. But as and when the final deal is out and it settles much lower, then you run the risk of being in the wrong place again. So we always keep a balanced portfolio, meaning we have a good measure of portfolio that is exposed to domestic, a large portion. In fact, the vast majority of the portion of the portfolio is exposed to and invested in domestic opportunities and has always been, not just right now. And there is a decent amount of exposure to export-oriented companies as well, not only first of all, IT services doesn't get impacted by all this, but services are out of the ambit, right? So there is a decent amount of exports-oriented exposure in the portfolio. We at least are not changing the mix in any manner.
Prashant, this China plus one was also seen as India's big opportunity to gain from global supply chain diversification. Whether it comes to EMS companies, electronics, auto components. Now, given that India's position may be a little unfavorable versus some of the other peers whose tariff is currently lower, does that derail the entire strategy and the value proposition for investing in auto components or EMS companies?
No, I don't think so, because those are far more structural decisions that global corporates make from a decades perspective rather than weeks or months perspective. I don't think anyone believes this 50% tariffs are here to stay for good. I mean, even if you assume that Trump sticks to them, Trump finally is only 3 years or 3+ years left. That's a long time, I know, but still, I doubt these are factors that global corporates would cause global corporates to make a U-turn. Yes, on the margin, maybe people would go a little slower to see where things settle. But remember, there aren't many alternatives for China plus one in some of the sectors. India, given its abundant workforce and the huge size of the domestic market, is a natural or a strong, I won't say the only alternative, but a strong alternative. So what you're saying, Rima, is true. If this uncertainty sustains for a very long period of time, it can slow down that decision making. But I don't think that reversing, because corporates worldwide have the tariffs, if anything, have demonstrated very strongly that your supply chains can't be dependent on one country or two country or a specific geographical area. So that diversification anyways would continue from China. and India remains a very strong alternative.
Okay, so even if our tariffs are between 20-25%, we're still a very stable, reliable alternative to China. Prashant, in any way, do you think markets are being a little too complacent about this tariff threat? What is your own opinion? Because every time, it just seems like a bit of an underreaction by the markets.
I think, look, if you see in April, when Trump first announced early April the tariffs, hardly any of those have panned out the way he announced. Yeah, most of them have been curtailed down. Yes, India has gone the reverse way, but given the experience that the market has had over the last 3 months, market, I think right now is appropriately assuming that these tariffs on India would not stick, first of all. That. Secondly, if the tariffs were to stick, yes, there would be further potential downside for economic growth expectations and corporate earnings expectations and whatnot due to the economic growth. The direct hit of tariffs is going to be only on a few sectors which are very small from a market perspective or the index perspective. But if the tariffs were to stay at 50%, maybe it could cause some hit to the economic growth. And that could have impact on broader other sectors as well. And that could be few percentage points further on the market. It's not a development that would cause, in my view, a double-digit kind of decline on its own.
The primary reason why the markets also went down, Prashant, could be attributed to earnings, right? We went down from 26,000 plus to sub 22,000 after the second quarter results last year. And this quarter as well, barring a few names, has been nothing much to write home about. Do you believe that this earnings disappointment is here to stay for another couple of more quarters before the low base kicks in and we start seeing some improvement? Or this was possibly the last of the sluggish earnings period that we have seen?
Very hard to say almost, but I think most corporates, what little they know from what they see in their end market, they are suggesting that another quarter or two of sluggishness is there. However, having said that, in my experience, corporates always say, when in a downturn or in a sluggish environment, they always say a quarter or two of sluggishness, and then we see markets picking up. They have no clue beyond 6 months themselves, but that's what everyone is saying. So everyone else is also saying the same, towing the same line. One has to almost also keep in mind this year's somewhat slower growth is on the back of very strong growth that we've seen after COVID, post-COVID. So 18-20% kind of CAGR we saw for 4 years is not sustainable over time. We have grown low double digits in earnings growth. So in a way, this year is a year of normalization. And going forward, we believe earnings growth should be in line with nominal GDP growth rate of low double digits, 10 to 12%.
Okay, so you rightly pointed out nobody has any idea beyond 6 months. It's been quite volatile and we really don't know what happens with the commentary coming in from the US and President Donald Trump as well. Always a pleasure speaking with you, Prashant. Thank you so much for joining in today with your views on what's happening with the global picture and Indian economy as well. Time for a short break now. Management of Jindal Stainless will join us next to discuss their quarter one numbers and more.